Hello, my name is Brian Kaplan. I'm editor of the Banker magazine. And for some time now, the Banker, in association with the Financial Times and FTFM, which is the newspaper for the fund management industry, have been putting together a series which we've been calling the Financial Markets Series. And we've been looking at various aspects of the financial markets. And in the latest one, we're spotlighting on the foreign exchange market. Now, the foreign exchange market is very interesting because over the period of the crisis, it's been one of the fastest growing markets. So whereas most other markets have collapsed or struggled with growth, actually foreign exchange has boomed. And the daily turnover in foreign exchange has gone from something like 3.2 trillion in 2007 to a figure of about 4 trillion now. And the spot trading element of that is 1.5 trillion, which is actually a 50% leap on the figures for 2 or 3 years ago. And one of the things we're seeing in foreign exchange now is that the asset class is maturing and being treated very much like its own asset class, which it wasn't a few years ago. We're starting to see people using the foreign exchange markets to implement their macroeconomic strategies. It's attractive as an asset class because it has very low correlation with other assets. And we're starting to see instruments like exchange-traded products coming along. So I'm here today with Silvia Pavoni, who's the investment editor of the Banker magazine, and she's been writing an article for our special report on foreign exchange, which looks at the Brazilian real. Now, Silvia, the Brazilian real has been one of the strongest currencies over the last couple of years. It's gone up against the dollar in extraordinary terms. But clearly, when you have a growth in the strength of a currency like that, it does have some negative consequences for a major economy. And you've been talking to people in the foreign exchange market and amongst Brazilian business. What sorts of things are they telling you about the Brazilian currency?
Well, the pros and cons with the growth of the real. This has been happening for over a year now. The positive aspects is that the real has maintained a very low volatility. So we're talking now about a range which is way below 10%, while currencies usually tend to have a volatility between 10 and 15%. So this is really good news for exporters because it means that they can actually plan in a more risk-free way. But this also means that a high real also means that it costs even more to manufacture in Brazil. In fact, for other reasons beyond the high value of the real, there is a study that shows that manufacturing in Brazil costs 36% more than manufacturing in the US or Germany, which is an extraordinary find.
I mean, this is extraordinary. I mean, no one would ever guess that, you know. I mean, we still tend to think of emerging markets, especially somewhere like China, as being places that, their competitive advantage is low labor costs and large-scale manufacturing of exports. But clearly, in Brazil's case, this is not accurate.
This is not the case.
I mean,
in Brazil, no.
Obviously, Brazil has its strengths as a commodity exporter. We know that, but it still needs to develop some sort of manufacturing base, presumably, if it's really going to make the leap to developed country status. I mean, how much harm is the real doing, the strong real doing, to Brazil's hopes of achieving that aim?
Well, there are many commentators and economists are worrying about the effect of a strong rise on the future of the manufacturing industry. And I don't think that anybody will want a Brazil that is purely an exporter of commodities and an importer of added value final products or even technology. So it will be very interesting to see what the government will do to help reducing the high valuation of the rice. The other unique factor to Brazil is, of course, also the very high interest rates. Now, Brazilians culturally are still very much, still perhaps a little bit in shock, but they still very vividly remember the times of high inflation, and that's why they react so quickly and so strongly to fears of high inflation. The interest rate currently sits at 10.75%, which is an extraordinarily high level. And this also means that the actual cost of borrowing for corporates can be as high as 30 and 40%. So these are clearly significant significant
impediments. Yeah.
Of course, yes.
But I know that the finance minister of Brazil has made some very strong comments
Yes.
about the kind of actions that Brazil might take to cool down the real. And a couple of years ago, perhaps not as long as that, in fact, I mean, they did introduce for a while some capital controls. I mean, how serious do you think they are about trying to control the overvaluation of the currency?
Mm-hmm.
And I mean, we know with markets that it's difficult to bet against them. Once, particularly with currency movements, we've seen that go wrong many times, even in the UK. I mean, how successful are they likely to be in terms of, of producing an effect?
The fee, let's say, tax on capital inflows is actually introduced in the legislation. So all the government needs to do to move it from 0% to 2%, which was the previous cap. It's very easy, and this tells you how scared the Brazilians are about overheating of the.
But I don't think it made much difference last time, did it? When they did introduce it.
Well, it did affect some investors in the country, but the ones that are looking at Brazil are long-term investors, so the ones that actually see.
Well, that's another interesting issue. I mean, do we have any idea for how much of the capital inflows they have are genuine capital inflows for foreign direct investment, which is clearly a healthy development, or how much is it that hot money is coming into Brazil just to basically take advantage of a strengthening currency and very high interest rates?
Right. Well, the people I spoke to, they all were very optimistic about the long-term intentions of investors. So it seems like people that go to Brazil are there for the long run. So they don't believe that there is a speculative risk on the currency. That's what they are saying. Nevertheless, this still means that the economy is, overheating perhaps.
That's right.
And
now, I mean, Brazil has developed its trade with some of the other emerging markets, particularly China. And maybe it's not so much of a problem with China, because China has its own currency that is, at least according to some analysts, also overvalued. I mean, what has been the sort of development of Brazil-China trade, and what role has the currency played in that?
There is a high correlation between the price of commodities and the real. So China's replaced the US as the leading partner for the export of commodities, and they're all benefiting from the high prices of commodities. So that's the fluctuation in the reals hasn't affected the export of commodities.
Because is it the case that the commodities are actually priced in dollars in some cases?
The fact is that the demand from China is so strong.
It doesn't really matter.
It doesn't quite matter. Yes.
Okay. So in other words, a strong currency has much less effect on a commodity exports than it does on something like manufacturing, which is very price sensitive.
That's correct. Yes. It will be really interesting to see what the future, the next government, the incoming government, will do to try to contain this issue. And we shall see also what the growth of the economy will be. So there are forecasts now place Brazil's GDP at 7% growth in the next year. So.
Okay, well, thank you very much. We won't have to wait too long to find out whether the presidential election in Brazil has an impact on the currency. It's going to be held later in the year, and the new president will come into office next year. So we'll see what kinds of policy measures the new government will come up with. That report on the Brazilian real will be part of our special report on foreign exchange, which will be in the October issue of The Banker. So make sure that you get your copy.